Welcome back. Well, a couple of days back, we were talking about the triple upper circuit on Indiabulls Housing Finance. Today, it's the turn on the downside. 15% lower freeze right now on the stock. Well, there are others as well participating in the downside. You have IndusInd Bank, which is down 7%. ICICI is down about 6%. And the Bank Nifty is down 750 points. Now, keep in mind, this is entirely global in nature. The German market is now down 2.6%. The FTSE is down 2.6% as well. The Dow futures as well down quite a bit. So once again, the market just latching on to that renewed corona threat and seeing lower levels, and our market being part of that as well. But let's get the BTST calls then. We have Ashwani, Mitessh and Prakash joining us for that. Ashwani, so obviously you would carry your puts. You got in at a good level, I guess. Would that be the advice for everyone, and what would be your BTST calls?
See, first of all, volatility last 5 days you had triple digit moves. I call this market Rohit Sharma. So you have been pushed into a corner. The market is now rushing on the other side. If you don't want to do puts or take short positions, get out of the way. Cut your long positions, particularly on futures. I have received messages from people that they are losing 10 lakh and 20 lakh and 15 lakh. This market is likely to move on the downside at a very fast pace. So, this is a macro trigger. Macro moves move markets, particularly when they are overbought or they are oversold. So keep this in mind. If you want to do 10,000 puts, you can do them. They will obviously make you a lot of money and are fairly safe. 235, 240 is the price right now. Having said that, JSW Steel is a sell with a stop of 201, target of 186. Maruti is a sell with a stop of 5800, target of 5650. And Berger Paint is a buy with a stop of 535, target of 560.
Okay, all right. Those are Ashwini's trades. By the way, the updates on your screen, they don't really impact listed banks, because we don't have too many cooperative banks of that pedigree. But it stems from the PMC crisis, and it seems that it's very, very clear now. Urban cooperative banks and state cooperative banks, they all come under the RBI purview after the fiasco that we saw in PMC. But let's continue with more of the trading calls. Prakash, let me come to you. Prakash Gaba, that is. What are the stocks you're working with now?
Two stocks, both on the short side. Bharti Airtel, yes, is looking weak. Possibly we'll see it slide to 550 or even lower. Stop about 570 should be fine. And second is ICICI Bank. I think we can see it slide to 345 zones or lower. Stop about 363. Market looks weak to me. All rallies need to be sold into.
Okay, and Mitessh, what would be your calls?
I have two sell calls. The first one is a Maharaja battery, which is a sell with a stop at 663, targets of 640 here, and STBT on Bharat Forge with a stop at 364 for targets of 350.
Okay, all right. So those are some of the trades that are coming in. Prakash, let me take the bank question to you as well. I mean, my gosh, look at the fall on the Bank Nifty. It's 800 points down now. ICICI is down 7%. Now, this is not a joke anymore. We're talking about ICICI Bank falling 7% today. So what do you make of it? Is it just very swift adjustment of trading positions, and is that how it's going to play for the next couple of weeks?
No, I think the fall that could come as and when it comes will probably be triggered by global mood and global flows on liquidity. The market has risen on the back of that, and it will probably reverse also on the back of that. And today there's a very clear indication in markets like Europe and US that things aren't looking up at all. I mean, we try and spin all the negative news into something which remotely sounds positive just because it was supporting the narrative of the market. So for once I've seen news flow actually going in sync with what the market was telling you rather than the other way around. And that has caught the fancy of a lot of new people who don't understand what volatility can do. And I fully agree with Ashwini, what he was talking about anecdotally, that things could be so, people could get completely whipsawed into bankruptcy in these markets within a few weeks, not even a month or so. So I think banks are going to take it on the chin for the simple reason that except for technology companies in the US, none of the earnings or visibility of earnings is anything to write home about. Especially core sector businesses, right? And we've seen how there's shale bankruptcies which are staring in the face, and you have some of the larger aviation names which came back out of sentiment change, but nothing much has actually happened. So there's a lot that will get reversed. And of course, our markets is singing a different tune altogether. So we've got, even in the lockdown is not yet out, we still have a PVR doing so well. And I don't see, how you can justify that. So there are going to be a lot of these realizations that will come in by the time you would have paid the price. So banks will probably be the biggest because they are the ones which actually are left holding the baby when things go wrong. And that is bound to happen as soon as the stimulus starts drying out or the percolation effect starts, waning off. So that is likely to happen probably in the next couple of weeks or maybe a month's time. And probably you'll see some very stark realities on the bank balance sheets. And look at all of them wanting to raise money. I mean, ICICI has talked about raising money. It's not because they want to lend, but tomorrow it's going to be very difficult to shore up your balance sheet if that fracture happens. So that's what everybody is getting up. The smart ones have done it, HDFC, Kotak, all of them. So the writing is on the wall. You just need to make sure that you get out in time.
Okay, finally, Prakash, before we thank you, I just wanted your thoughts on whether Muthoot's gonna fall more before you buy it, or would you wait for it to fall more before to buy it again?
Yes, absolutely. I love the stock, and we've discussed this a lot of times ever since it kind of started getting re-rated at that 700 levels, Anuj. But I would buy it at 1000 plus 1100 at this point. It's becoming like Bajaj Finance, what Bajaj Finance used to be, that nothing can go wrong. And that's exactly when pricing to perfection makes it even difficult to make money at that entry point. I would love to buy it on dips, and I think there's a robust story in place. It's just that 1100 is not a price that I'm comfortable at all buying into.
Okay, all right. Thanks very much, Prakash, for being with us this afternoon. And as we say thank you to Prakash, I mean, Anuj, the digits are losing their meaning. I mean, 600 point on the bank nifty, then we said 700, 800, 900 points down on the bank nifty. I guess that's what a liquidity rally looks like when it reverses, Anuj.
Oh, yes, absolutely. And, Surabhi, I'll just say one thing, and I tweeted about this as well. And, this is basically, especially for retail, a lot of people are extrapolating the moves of last 3 months. A lot of people have been sitting at home, and, we all know that retail participation in the market's been at the highest level, not just in India, worldwide. A lot of new demat accounts opening, perhaps highest of all time. And, a lot of people whose businesses have slowed down or been forced to shut down because of COVID and lockdown have found solace in stock markets. And call it beginner's luck or whatever, the last 3 months have been perhaps the best 3 months that Indian market has seen in a really, really long time. And that is where the danger of extrapolation comes in. Because you know what? These things happen. The moves over the last 2-3 months make everyone feel like a genius. You give a call, and then all of a sudden that call is working. You say, by the end of the day, you feel that, okay, wow, I gave a great call. Happens to everyone. So today is a reminder about how the liquidity-driven markets can move on the other side as well, and always be careful of the risk associated with these kind of markets globally as well. This is everyone knows that a lot of people are buying stocks, poor quality stocks, knowing that fundamentals are bad, but they know the stocks will go up. For example, a lot of tier 2 NBFCs, everyone knows that there's going to be a lot of pain in the system, and everyone knows that they will go through second round of decline. But right now, because money is chasing them, you saw the kind of moves that we had in some of the tier 2 NBFCs 2 or 3 days back, 10, 12, 15, 20, 40, 50% moves. That will happen because these are beaten down stocks and money will chase them. But you need to know when to get out of these stocks. That is most important. Exit is more important than entry into some of these stocks. I just thought that I'll make this point because right now, of course, the market's down. Now, one last point. So the market's now factoring in that we'll have a washout session in the US as well, because the European markets are down 3%. Dow futures are down about almost 300 points. I think the outlier would be if the US market once again stages a miraculous recovery overnight today. If that would happen, then I think tomorrow we are in for another reversal. So it's really all over the place, and I think you'll have to now just take each day as it comes.
No, Anuj, it reminds me of, what we always used to do in the park in our younger days, right? The seesaw. That's what trade these days has become like. That's what it just reminded me of, that flashback from the past. Okay, on that note, we need to take a very quick break. We will come back with more market insights on the other side.